Texas LLC agreements are powerful legal tools that protect your business and personal assets, even though they're not legally required in the state. Understanding how to properly draft one can save you from costly disputes and legal complications down the road. An LLC operating agreement in Texas serves as the foundation for your company's internal operations. While the state doesn't mandate having one, operating without this document means your business automatically falls under the default rules of the Texas Business Organizations Code, which may not align with your specific needs or intentions. A comprehensive Texas LLC operating agreement should include several key elements: formation details, registered agent information, the business purpose and location, membership structure, capital contributions, profit distribution methods, and procedures for admitting or removing members. These provisions create clarity and prevent potential conflicts among business owners. To form an LLC in Texas, start by conducting a name search on the Secretary of State website to ensure your desired business name is available. Your company name must include designations like LLC, limited liability company, or other approved variations. After securing your business name, appoint a registered agent based in Texas who will receive legal documents on behalf of your company. Next, file the certificate of formation with the Texas Secretary of State, along with a $300 filing fee for domestic LLCs or $750 for foreign LLCs. Once approved, you can create your operating agreement and apply for an employer identification number from the IRS, which you'll need for taxes, banking, and hiring employees. Even though Texas doesn't legally require an operating agreement, having one provides significant benefits. It allows you to customize how profits and losses are allocated, define roles and responsibilities, establish decision-making procedures, and outline steps for ownership changes or business dissolution. Without this formal document, disputes are more likely to arise, and courts may apply default rules that don't match your business intentions. Texas recognizes several types of LLCs, each with unique considerations for your operating agreement. Traditional LLCs are the most common structure. Series LLCs allow the creation of separate series under one master LLC, each with its own assets and liabilities. Professional LLCs are restricted to licensed professionals like doctors and lawyers. Some LLCs elect S corporation or C corporation tax treatment, which requires specific provisions in their agreements to address tax implications. When writing your operating agreement, start by downloading a template from the Texas Secretary of State website. Include your company name, effective date, state location, and owner information. For multi-member LLCs, specify capital contributions and distribution percentages for each member. Detail procedures for annual meetings, interest assignments, property ownership, member admission, withdrawal events, and company dissolution. Every Texas LLC agreement should include certain key provisions. The organization section states the LLC's name, formation date, and business purpose. The management structure defines whether the LLC is member-managed or manager-managed. Capital contribution provisions specify initial investments and procedures for future contributions. Distribution sections establish how profits and losses are allocated. Membership change provisions detail procedures for adding or removing members. Single-member and multi-member LLCs require different approaches to operating agreements. For single-member LLCs, the agreement should outline the sole owner's authority and establish clear separation between business and personal assets. Multi-member agreements must define each member's capital contributions, ownership percentages, voting rights, and profit distribution formulas. Your LLC agreement should clearly identify whether your company is member-managed or manager-managed. In member-managed LLCs, all owners participate in daily operations and vote on major decisions. Manager-managed LLCs appoint specific individuals to handle operations, which works well when some members are passive investors or when professional management is preferred. To maintain compliance in Texas, all LLCs must file an annual public information report and franchise tax with the Office of the Comptroller by May 15th, regardless of whether the business conducted activities or earned income. The franchise tax is typically 1% of gross receipts over $1 million, though it varies by industry. Even if your LLC earns no income, you must submit these filings to avoid penalties. Beyond annual filings, your Texas LLC must maintain a registered agent with a physical address in the state and keep accurate business records at your principal office. These records should include member information formation documents, financial statements, and tax returns. If your LLC's registered agent, address, or ownership changes, you must file an amendment with the Secretary of State. While Texas doesn't require filing your operating agreement with the state, store this document securely in both physical and digital formats, accessible to all members. Keep it with other core business documents like EIN confirmation letters and banking records. When amendments occur, ensure all members sign the updated version and archive previous versions. A well-drafted LLC agreement provides the foundation for your Texas business, protecting your interests and clarifying expectations for all involved parties. Taking the time to create a comprehensive agreement tailored to your specific business needs will help your company operate smoothly and avoid costly disputes in the future.